Welcome back. You're with us here on Opening Fire. There's about 40 seconds to go for the start this morning. The SGX is on your screen about 3.5 odd points lower. March Nifty futures was up 13-14 points at 85.78. Let's just start the session, the pre-open session. We'll just refer to some prices and I'll come back with Rajat, who's there. Rajat Bose from Kolkata, and Phani Sekhar is joining us from our Mumbai studios here as well. Rajat, of course, was telling us that he believes a deeper correction is in order, and this is one of those instances where the skeptics or the bears are going to be most likely right. They haven't been right now for a while, but this could be different. In this instance, it could be slightly different. I was just reading a note from CLSA. It's I think dated yesterday, and the CLSA is a large foreign brokerage, and they were right. I mean, I was just reading the note, and the basic takeaway of the note was that interest from US investors for Indian equity seems to be peaking. That was the takeaway. Now, you know, it's hard to tell with exactly at what point those things will come into play, etc. But I think that's something what Rajat was referring to earlier as well. The point CLS is making, and many have made over a while, is that India is overweight. People generally overweight relative to their relatively overweight on India relative to India's weight in various indices like the MSCI or whatever funds are benchmarked against. So they're already overweight. So it's not as if they're underweight and there is scope to increase the weight on India substantially. If anything, if there has to be action, it's going to be actually decrease the weight, not increase the weight from here in the near term, in the medium term. So that's essentially what CLSA is pointing out, and we'll put those graphics up in a bit as well. Nifty is up about 50 odd points. The Sensex is up about 60 points. This is the first 1 minute of the pre-open, so it's always a little all over the place, and it should settle down. I think the rupee is starting at about 62.31 as well. That's about 0.07 odd % change against the US dollar this morning. So this is what's coming through for now. Phani Sekhar is with us as well. Rajat is with us. Phani, to you on the market, what do you think? Deeper correction still?
Morning, Prashant. Well, I think price-wise we are almost there. Another 2-3% might not be ruled out, but I'm not seeing a 10% kind of correction from these levels. However, we might be in this range of 8,600 to 9,000 for quite some time to come, maybe another 3 to 4 months. We might consolidate time-wise. And the reason for that is while you have had a lot of investor interest, both domestic and foreign, come to India on the back of what all reforms the government can do, I think a large part of that story is already in the price. What you want right now is the earnings to catch up, something that is not happening, not likely to happen for another 6 months or so. Right now, the market is factoring in that earnings will start catching up from the second half of FY16, 1 quarter into the next year, that is by June. If we see firm signs of that, then you will see market bouncing back and maybe crossing 9,000 levels decisively. However, if those signs were not to be there, which means that if the market feels that earnings will be further pushed back, then I think you might be in for some kind of disappointment. So I think earnings from here on will be the key, and more importantly in the near term, what the corporates have to say after their fourth quarter results about their outlook for the rest of the year. So I think the action now shifts to earnings.
Right. But you're saying even if earnings were to disappoint, you will still not see a 10% correction?
Because poor to mediocre earnings will not come as a surprise to the market.
Yeah.
Market knows that.
Let's define this, right? Let's define this. Now, earnings, we can wait for earnings recovery endlessly, and market has shown endless patience over the last 18 months or so, right? I mean, it's never the next quarter, but it's the 2 quarters after the next quarter that people talk about, and that's essentially been the logic. And prices have been bid up. Markets have done very well. In a way, are you saying that that patience is coming to an end? Because I don't think people will give up waiting for earnings recovery. But it's about the patience, right? How long are you willing to wait for earnings recovery to happen? It's surely not going to happen in the fourth quarter, the earnings right in front of us. So it's about timing. So what's your view there?
That's right, and patience does run out on everything. So while people do expect things to improve from, say, October of this year, now if there were to be adverse developments, either that can be global macro or politically, domestically, then the entire hypothesis of earnings bouncing back from October is in question.
So politically here, what are you referring to, Phani?
Well, the next two pieces of legislation, which is the GST and the land acquisition, which I think will be pushed to the monsoon session, if signs emanate that they might not be done even in the monsoon session, especially the land acquisition, and if there are fresh roadblocks to GST, then I think there will be tough questions that will be asked.
But that still has no real implication on earnings recovery, Phani, right? I mean, it's no way related to even medium-term earnings, both these pieces of legislation, the land part or GST. Earnings recovery is not based on predicated on any of these things. That has got to revive on its own, right? And are you saying that may not happen? And some of the buffers, like getting some of these legislation through, if that also doesn't happen, then the market reaction could be more negative. Is that what you're saying?
Now, if you break down the earnings component, the agriculture sector is in its own sphere, so it's not dependent on what is happening to macro, largely. Services sector is behaving okay, it can do well, especially the financial services, if the manufacturing and the infrastructure, the entire capital intensive piece is put in place. Now, the main roadblock is in the capital intensive businesses, the entire capex cycle, if you might call. That is exactly where you have toxic assets in the system, and that is both a function of what is happening on the ground plus the business sentiment. So while the GST might help you in aiding the business sentiment, and earnings, of course, due to GST will pan out only in the medium to long term. But land acquisition becomes pretty crucial, because the next leg of the growth cycle being put in by the government by slogans such as Make in India, etc., will be a direct function of how successfully can you have the land acquisition go through. Other than that, if you see the outlook on stalled projects, that is improving gradually. But again, you are not seeing much impact on the ground. So I think largely it will depend on how quickly those stalled projects, which again to a great extent depend on environment clearances, land acquisition, these kind of irritants. So I think everything then boils down to whether corporate India has enough confidence and the business sentiment is really improving or not.
Okay, all right. Rajat, I want to get your thoughts on things like SBI. SBI, for example, I think is broken below its 200-day moving average, right?
Yeah, it has.
I think ICICI also. Go on.
Talking about SBI, I would say that the breakdown below 200-day moving average may show a reverse bounce for a while. Maybe a 284, 285 kind of levels can again come in it, because this is the first time that SBI is testing its 200-day exponential moving average in about a year's time or so. I mean, even more than a year back, it was still above that 200 exponential moving average. So first time test could meet with a reverse bounce, but overall chart pattern of SBI suggests that not just SBI, in fact ICICI chart is even worse. They are suggesting that further cuts are likely. But I would like to harp upon a fundamental point, Prashant, that is, it's not just SBI or ICICI. You people are expecting, say if at all an earnings recovery comes, then that will justify the prices and the prices will be maintained. This is logical, this is intuitive, this is pure economic logic that is playing out in this kind of an expectation. But suppose if you were to if you were to go and check it out in financial history, right from 1975 to about say 2000 or 2010, you'll notice one thing, that in the United States, where markets are researched even more strongly even those days, expecting an earnings recovery, the S&P moved up. But in those 16 quarters, when the earnings recovery actually happened, the market went down. Each time it was repeated, and that's something I'm really worried, because you see, generally MBA grads are not expected to study financial history, but the financial history, at least for market participants, pays off. And therein lies my worry, because I've seen history repeating itself in financial markets pretty regularly, and this is something that we are not taking into consideration. That now, what kind of an earnings recovery would really justify the kind of prices that we are paying for the stocks at current date? I mean, this is something that is beating me.
Right. So, in a way, Rajat, the earnings recovery could be if markets are going down. By corollary, if markets are going down, then earnings must be recovering. But I'm just making that point on a lighter note. We'll come back. We'll take that point forward. I have to take a quick break here. Stay on with us. There's about 5 minutes to go for market open. We are back in 2. All right, welcome back. You're with us here on Opening 5. There's about 40 seconds to go for the market open. I think we've left off higher by about 40 points on the Nifty. The Sensex, though, interestingly, is down about 10 points. And we're starting with the open, the continuous session in a few seconds from now. So that's basically what you have. And that's on your screen right now. So Sensex is up actually about 55 odd points or so. My screen here on my computer is not updated. Okay, now it is. We'll have the opening prices on your screen, and then we'll get back to Rajat and Phani for our discussion which we were having earlier. Sun Pharma is the top gainer in the pre-open session. There's a press conference, by the way, from Dilip Shangvi at 12 noon today. Bharti is the top loser. It's down 1 3/4%. So Sun up, Bharti down. Everything in between. Nothing large or outsized. The market open on your screen. SBI 0.5% higher. Bank of Baroda is up about a third. Sesa Sterlite is flat. I mean, absolutely. Tata Motors is up 1%. HDFC is higher, now down. Reliance is flattish. HCL Tech is up 0.17%. BHEL is up 0.5% or so. Wipro is down about 0.2. BPCL is down about 1/3%. JSPL is down about 3/4. ICICI Bank is flat to slightly higher. SBI is up about 1/3%. Bharti is down 0.5%. NTPC is up 0.5%. Sun Pharma is up 2%. You've got Tata Steel, which is flat, slightly lower. ONGC is up about 0.5%. ITC is up about 1/4. IDFC is down 1/3. HCL Tech is up 1/3. Tata Motors is up nearly 1%. 55 points on the Sensex, about 18 points on the Nifty right now is what you've got. Hindalco is up 1. Sesa Sterlite is up 0.5%. Axis Bank is flattish to slightly higher. Lupin is up 3/4. Power Grid is down 0.5%. Coal India is down about 1/3. Punjab National Bank is up 0.12. Infosys is up about 1/3. Reliance is down about 1/4. BHEL is up 1/4. Wipro is down about 1/4 plus. 50 on the Sensex and about 15-16 odd points on the Nifty is what you've got at this stage. GAIL, L&T, NMDC marginally lower. IPCA is down about 10% or so. I mean, this was expected. 2 new plants, not new, but 2 additional plants have been put under the US import alert. One was already under import alert, the Ratlam facility. So all 3 US FDA approved facilities are under an import alert, which means that they can't export to the US. There was also news this morning which came that the FIPB has approved increase in how much FIS can buy in IPCA laboratories to, I think, about 35% or so. But I guess that doesn't matter for now. Glenmark is up about 1/3%. Sun Pharma is up 1 1/4. As I said, there's a press conference there today. Idea Cellular is up about 1.25%. Bharti, I noticed, was off 0.5% earlier. Godrej Properties is up 3.5% and more, 260 rupees on Godrej Properties. You got PNB, which is up 0.12%. GNFC is up 1.25%. DB Realty is up about 4%. CARE is up 2.25%. Gujarat Pipavav is up 2%, 251, 252. Swaraj Engines 2.7 higher. You got BF Utilities, which is up about 1.8. Bajaj Electricals 2. Now we're looking at the most active screen in the market. Treehouse is up about 2%. NMDC, by price or by volume, basically it'll throw up. Tata Coffee is up 2%. GVK Power is up 1.25%. Praj Industries is up 1.6%. Tilak 1.8% now. Shriram City 1%. Tilak Nagar about 0.7%. Zensar Tech is up 2%. Balkrishna Industries is up about 1/4. Uttam Galwa is up 1%. Amtech India has got about 2% gains. It's about 94,000 shares. JM Financial is up about 1.25%, 1.5% actually. Oil India is up about 1.25%. GHCL, Bharti Infratel, Peninsula are some of the other names. 3 minutes into open, 30 points on the Sensex and about 15 odd points on the Nifty at this stage. This is what you've got going. Phani and Rajat are with us. Rajat, so you made your point earlier about in the US, but the point you were making for just like to recap for our viewers, you're saying that in the US over the last 40 years or so, the S&P has gone up in anticipation of earnings recovery and is actually corrected when earnings have actually started recovering, right? That's the point that you were making. And you were saying that you were afraid the same thing might happen here as well. That's what history teaches us. But I think, you know, that would be better than earnings not recovering at all, Rajat, I guess.
Yeah, I mean, not recovering at all would be a very, very bad scenario. I mean, we have seen, and what you said jocularly as a corollary, I mean, look at the last 3 quarters. I mean, earnings growth tapered off and markets continued to move up with an expectation that something great is going to happen going forward, and that great hasn't yet happened, and we are waiting for Godot. I mean, it would be too much of a statement to say waiting for Godot, but at least say me and you and Phani play Vladimir and Estragon and wait for Mr. Godot to appear. In Samuel Beckett's play, he did not. Maybe here he will at some point in time. But then the patience of the foreign investors are wearing thin. That's what the problem about. And given scenario that we are going to see, I mean, here I shudder at the confidence that people are showing. Yesterday I was in one of the channels, business TV channels, where I heard a commentator saying that not just in June, not in September, not in circa 2015, US Fed is going to raise rates. I mean, this is the kind of confidence that market participants, even noted experts, are displaying. And whereas, I mean, a Federal Reserve Governor, of course, he is not voting this year, that James Bullard says that he is afraid of a violent reaction by the market, and this 0% interest rate kind of thing is hardly appropriate. Maybe he is the most hawkish out there, but suppose if it were to happen at any point in time, what is going to happen to the emerging market bond markets? I mean, the bond markets here or bond markets elsewhere, and what kind of money outflow that can happen, and how would we really manage those situations? I mean, now we say that, okay, when it is 8800, we are talking of 8450. When it is 8450, we are talking of 8100. But then slowly the values are receding, and the chart patterns are suggesting that the weekly chart is actually, if you look at the bank charts on weekly basis, then you find that most of them are in real deep trouble. I mean, only maybe an HDFC Bank, because foreigners are still betting on it. CLSA has not caught any weightage on it. But look at the cards that CLSA incorporated in SBI, 3%. Unbelievable. I mean, what can really pan out? I'm not scaring anybody, but I'm scared because these levels are not justified by any means. And how long we continue to hope?
Hope is eternal, as they say, Rajat. So I guess people wait and wait. They've been waiting for a while. But let's see. IPCA Laboratories, by the way, is recovered a little bit. I mean, I was seeing the price; it's down about 7% now. It was down a little over 10% just a while back, but it's now recovered to being down about 7% odd. So yeah, large volumes, very large volumes, 770,000 shares on IPCA. Any thoughts on this one? Phani, IPCA Laboratories?
Well, can't comment on the stock
comment on
price.
stocks. I thought I'll give it a shot. It's a new day. Anyway, the news is pretty clear. But the good thing, the silver lining in a sense, was that the two plants for which they've got the import alert have not been supplying anywhere for the last, I think, substantial period of time. So it's not as if it was an active plant and the FDA has shut it down. So that's a silver lining, not exactly good news. But all three plants which are approved are now can't supply now. Officially, they can't supply, even if they wanted to. Funny, you were telling me in the break that you and your fund are buying, right?
That's right.
So just tell us, give us a sectoral perspective on what are you focusing on?
Well, we are trying to take advantage of this particular correction. I agree largely with what Rajat says. However, let me give you a context. See, we are correcting from valuation levels of about 17 times when the market is expecting an earnings growth of somewhere around 18 to 20%. Now, what can go wrong? What can go wrong is your 18 to 20% earnings growth doesn't come, and earnings growth comes to about 10 to 12%. Even this year, FY15, earnings growth is likely to be around 8 to 9%. So if you continue the same earnings growth, then the market is not expected to drop off to say 14 or 13 times earnings, but it will correct to about 15 and a half, 16 times, something that is happening. So the worst case scenario, as long as your hypothesis of earnings growth recovering beyond 10% stays over the medium to long term, I think market will hold. Now, if for some reason you say that all bets are off on India, for that something drastic or something very adverse has to happen, and I don't think any one of us is expecting that. I don't see valuations come down to levels of 12, 13 times. Last time we saw this was maybe in 2012, right in the middle of gloom and doom. So I don't see those valuation levels coming. As long as valuation levels hold 15 and a half times, the worst case scenario is that market will grow at around 9 to 10%, which means that the better performing sectors, even within the market, will produce the much needed alpha for you. And if you look at the last 4 years, it has been the private sector banks, the better run NBFCs, which have generated that kind of alpha. And even there, the valuations are not obscene as they are in, say, pockets of FMCG or pharma. These are companies which are still trading at about 2.2, 2.4 times 1 year forward price to book.
Private sector banks.
That's right.
Yeah.
And they are still generating return on equities of 16% plus. For the last 4 years, they generated that kind of ROE, especially the private sector banks. I don't see why they should not generate that kind of ROE in the next 2 to 3 years. And for that, I think these valuation levels are fair and justified. The worst case is you don't make any money, but I don't see how you can lose out on your principal over the medium to long term.
Right. What about housing finance companies?
That's again a fantastic sub-segment of the financial services space because by the very nature of the business, the NPA levels are almost zero there, next to nothing. So the basic stress that you are seeing in the financial services sector, even other segments of NBFC like transport finance or infrastructure finance, are bogged down by toxic asset quality. That is something that is not there in HFC. HFC again traditionally has delivered more than 12 to 13% earnings growth over the last 4 to 5 years because the demand scenario is such. And if you assume that interest rates will come down by, if not 25 to 50 basis points over the next 12 to 15 months, I'm building a base case scenario, then it is going to be positive for housing finance companies in the form of better volumes. Again, valuations there are pretty reasonable when you look at what return on equity they're generating versus what growth is possible. So that's again one segment that investors can look at favorably.
Okay, housing finance companies. Rajat, why don't you tell us Let's take Indiabulls Housing Finance as a stock, and I mean it's done well, but it's done nowhere near as well as some of the other housing finance companies, like I mean LIC or GIC or GRU or Repco or any of the other companies in that space. But let's take Indiabulls Housing Finance, Rajat. How does it look?
Well, already it has corrected from 650 to about 550 and now sort of trying to really move up. And if it were to move up, say beyond 570, then you can expect some kind of a bounce back. But the pattern at the moment is suggesting that first level of distribution is already through and the prices have come down. Now, if it were to fall below 540, then a possible retest of the 200-day exponential moving average could be there. But as of now, I would say that I would closely watch whether it manages to get past 570 and holds there. If it were to do so, then probably another attempt. But here, for a fund manager, for a long-term investor, maybe it's a hold. But for short-term players, I would suggest that going below 540, one should actually bail out of this stock.
Below 540. What about the other names there? GRU Finance, Repco, there's LIC, there's GIC.
GRU and Canfin Home. These are the two I would suggest that at least when I'm expecting a medium-term correction, I would prefer to bail out now and re-enter at lower levels for the simple reason, suppose if Nifty were to correct, let's assume that Nifty would correct only 5%. These stocks can actually correct by 20%. So entering just like say LIC or UTI does for their funds, at least 20 to 25% they sell and they re-enter at lower levels. That kind of a thing, that kind of a strategy you can take, because immediately, be it GRU or be it Canfin Home or others, they are not going to go big time on the upside. Of course, people have a lot of confidence, like for instance.
Okay, all right. Phani, what would you, telecom names, right? Now, I think today is going to be the day number 19th, by the way, and auctions are going to end today. Phani. Stocks have done very well. Idea's payout is going to be some 30,000 crores plus, 50% higher than what was initially estimated, and the stock's done just fine through these auctions. What are people building in really?
Well, I don't know, Prashant. I have been unable to find out what people have been building for the last 3 years in this sector. Stock prices have not done very well. However, they have not corrected also. But if you strip off this sector, strip off this discussion of stock prices and look at the dynamics of this sector, then here is a sector that needs to buy spectrum, which is the lifeline of your business, every 10 years. And dish out a huge price.
20 years, 20 years.
20 years, 15 years, 20 years.
Actually, the auctions will keep going on. The only thing is this lot is valid for 20 years. The license period is 20 years, but auctions will go on for other slots.
Circle-wise, it will keep going on. But say you have to buy spectrum, which is the lifeline of your business every 20 years. And the price over 20 years will of course be inflation adjusted. Then what it means typically is that you have to pay an inflation adjusted price just to stay where you are. Now that is not a kind of business which any investor would love. If you look at any business, you have plant and machinery, you have land, or if you look at a services business, you build your brand. You don't have to pay your entire investment just to stay where you are. So on top of it, the entire equipment part, which has to be, which gets obsolete every 5 to 6 years, that's sizable part of their investment. It's a very, very heavily capital intensive business. The cash flows are under pressure. While though, if you look at the free cash flow to the firm, it's all right, but free cash flow to equity shareholders over medium to long terms time periods will always be, questionable. return on equities, even in the best of the projections that you see over the next 3 years, are not getting into double digits for any of these companies. But, investors do certainly build in miracles. Let us see what happens out there.
What happens there? I was looking, Idea's price on the day the auction started was 154 rupees. It's 174 now, 20 rupees higher. Idea's payout is 50% higher than, at least 50% higher than what was earlier assumed. Rajat, any thoughts on this?
Idea
Bharti, yeah. Telecom, basically.
Yeah, basically, I broadly agree with Phani. I mean, these Idea or Bharti, they have spiked up, but currently the short-term moving averages are suggesting that there is further fall likely in stocks like Bharti and Idea. Bharti may hold for some more time, but Idea will once again come down to something like 160 to 155 once this auction process is through, because I, for one, I have not studied in detail as Phani has done, and I'm really happy to hear him. But only thing that I find is that the kind of price that they are paying off for this auction, would they be able to raise the tariff levels, say data or voice, tariff levels to such prices that will justify paying this kind of prices for a spectrum? I mean, after that, shareholders would ever make money. I mean, this is a difficult scenario. I mean, from a technical point of view, you play for a short term, it's a speculation, that's great. But nothing beyond that. I mean, I would not like to hold a single telecom share in my portfolio.
It was pretty harsh, huh? But direct as well, so I got my answer. Rajat, JSPL. What would you do with that one? It's at 155. The mid-December low was 120, right? Now the bids were cancelled. I think that was expected that there would be cancellation. Now but the court has come in. What would you say, JSPL? What happens?
See, I have advised people that between say October and February, JSPL traded between say 125 and 150, and this is a major support area. Even you saw that day before it touched a low of 140 and bounced back. But now, from a technical point of view, unless 170 to about 175 is breached, it is not going to go anywhere on the upside. But typically, from a value investor's point of view, and my belief in cycles, that stocks and markets go through cycles, I would take some position and hold on to it. Of course, if 125 were to be broken, then I have to call it a day and book my losses and all that. But otherwise, this is one pariah stock I'm closely looking at, because pariahs have actually given me a lot of money in the past. Particularly, I'm zeroing in on this because I see that what more negatives can you bring in from these from the current levels? So that from that perspective, for a long-term buyer's point of view, you can continue to hold until it breaks 125.
All right, got that. We'll leave it there, gentlemen. Thank you very much, both of you, for coming in. Rajat, thank you. Phani, appreciate it. Let's take a quick break here. We are coming back in 2 minutes. The markets are higher by about 15 odd points or so on the Nifty. 8557, 60 points on the Sensex, 28,221. Take a break. Back in 2, and we have Mr. V. Vaidyanathan joining us on the other side when we return from Capital First Limited. Back in 2.